In this video, I can help you how can we make money from stock market. Do not skip the video. Step 1. Understand the basics. Before you start investing, it's crucial to understand the basics of the stock market. Stocks represent ownership in a company, and when you buy a stock, you're buying a small piece of that company. The stock market is where these shares are bought and sold. Prices fluctuate based on supply and demand, company performance, and broader economic factors. Your goal? To buy low and sell high, making a profit from the difference. Step 2. Educate yourself. The stock market can be intimidating, but knowledge is power. Start by reading books, following reputable financial websites, and watching educational videos. Some great beginner books include The Intelligent Investor by Benjamin Graham and A Random Walk Down Wall Street by Burton Malkiel. Familiarize yourself with key concepts like diversification, risk tolerance, and market trends. Step 3. Set financial goals. Before you invest, it's important to set clear financial goals. Are you investing for the short term, like saving for a vacation, or are you in it for the long haul, like retirement? Your goals will determine your investment strategy. Short-term goals might require safer, more liquid investments, while long-term goals can benefit from more aggressive growth strategies. Whatever your goals, make sure they're specific, measurable, and realistic. Step 4. Choose the right investment strategy. There are several ways to make money in the stock market, and your strategy will depend on your risk tolerance and financial goals. Here are a few options. Number 1. Long-term investing. Buy and hold quality stocks for years, benefiting from compound growth and dividends. Number 2. Dividend investing. Invest in companies that pay regular dividends, providing a steady income stream. Number 3. Growth investing. Focus on companies with high growth potential, though they may not pay dividends. Number 4. Index funds and ETFs. These track the performance of a market index and offer diversification with lower risk. Number 5. Day trading. Buy and sell stocks within the same day to capitalize on short-term price movements. This is risky and requires a lot of experience. Step 5. Diversify your portfolio. One of the most important rules of investing is diversification. Don't put all your eggs in one basket. Spread your investments across different sectors, industries, and asset classes to reduce risk. That way, if one stock or sector underperforms, the others can help balance out your portfolio. Consider a mix of stocks, bonds, and other assets like real estate or commodities. Step 6. Start investing with a plan. Once you've done your research and chosen a strategy, it's time to start investing. Open a brokerage account. Many platforms like Robinhood, E-Trade, or Fidelity make it easy to get started with just a few dollars. Start small and gradually increase your investments as you get more comfortable. Most importantly, stick to your plan and don't let emotions drive your decisions. The market will go up and down, but staying disciplined is key to long-term success. Step 7. Monitor and adjust. Investing isn't a set-and-forget-it process. Regularly monitor your investments to ensure they align with your goals. Rebalance your portfolio as needed, especially if certain stocks or sectors have grown disproportionately. Stay informed about market trends and economic news, but don't panic during market volatility. Remember, investing is a marathon, not a sprint.